All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen. Tuesday, the 3rd of June, 2025. So, yes, I wanted to quickly run this little video on the BOC interest rate decision that's coming out tomorrow. So, the Bank of Canada is coming out with their rate announcement, and yeah, we'll dig into all that. But before we jump in, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, as you know, we have a few central banks delivering, well, actually more of a couple of top central banks delivering this week. It's the BOC and the ECB, but the BOC will be the first one tomorrow, and the ECB is going to be on Thursday. But look, also, by the way, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the economic calendar and what's happening on Wednesday. So yes, this is the thing that I'm talking about here, the Bank of Canada interest rate decision, and we are expecting the rate to remain the same at 2.75. So look, the bank has remained steady for a couple of meetings already. So during the previous rate announcement, they also kept the rate at 2.75. I think that everybody's worried about inflation in general, that it could start picking up. So we don't want to increase way too much lending. However, look, in terms of inflation, there's a little bit of a issue there on the Canadian side. And look, inflation did come out on the very low side. The headline inflation came out at 1.7 against the previous 2.3. And yeah, I mean, that was quite a significant drop, to be honest. The core inflation came out at 2.5, actually higher than the previous. So in a way, there is this problem here that this drop could have been fueled by lower oil prices. But this core inflation number shows that actually inflation is starting to pick up again, starting to creep up. So in a way, on one side you're kind of meeting you're dropping below the BOC inflation target, but on the other hand you're having a problem here where the core inflation is starting to rise again. So again, this is a little bit of a tricky moment for them, and I think that this is what the bank acknowledges, and they're trying to understand how to proceed further. Most likely that they will just take a stance here, just not to do anything at this point, just to continue monitoring the inflation numbers, the job numbers as well. And in terms of the job numbers, let me actually have a quick look what's happening there in terms of jobless rate. In Canada, 6.9 jobless rate, unemployment rate, and that has actually pushed a little bit higher. So in a way, you need to kind of support the economy by lowering rates, but you don't want to overdo that because your core inflation is indicating that you're getting a little bit of an increase already. So yes, headline has dropped significantly, but again, maybe that has been driven by the the fuel costs. There we go. There, managed to squeeze this one out. Look, for now, of course, like I said, the rate is going to remain the same. So in a way, this could still apply positive pressure actually on or if we can name it this way, basically it could be a positive thing for the Canadian dollar, given the fact that the US dollar right now is also is kind of not actually not also, but on the weaker side. So in a way, we could see USD CAD drifting further south. Now, look, some of you might, of course, debate this. Maybe somebody will say, but hey, although we're trading below this downside line right here, which is taken from the current highest point of this year, but at the same time, there are things happening here. Let's check if we are near an important upside line. So this is one that's taken from the lowest point of December of 2023. I do understand this could be still somewhat of a tentative upside line, but nevertheless, let's keep an eye on it. So in a way, Like I said, I'm leaning a little bit more towards the downside. I'm gonna probably aim for this upside line first, and then we'll see. Maybe we'll get a break or not a break or something like that. But of course, we'll keep an eye on it, and we'll check if it's not going to be somewhat of a false breakout. Now, some of you are, again, depends on how you draw this, and you can, of course, you can draw from any point you wish. But again, that's why all these trend lines kind of in a way are a little bit on the subjective side. Now, either way, we're still monitoring that. So let's see if, like I said, if the no action from the Bank of Canada will push this one a little bit lower. However, there's another idea that I want to throw out here is that if, let's say, the BOC comes out, where is that? There we go. So if the BOC comes out with the same rate, so in a way, given the fact that the market is already expecting that, so maybe there is not going to be much action in the Canadian dollar, and maybe it's not going to weaken, but it might just not like maybe be as strong as possible. So this is, like I said, this is another little idea, little theory. So in a way, then everything is left for US dollar to decide, and how it wants to go further. Or do we want to continue declining, or is it time for a little bit of a retracement back up? So that's where, like I said, that's why be very careful. We're near key support zones right now, and we are at, like, I wouldn't say a critical area, but quite an important one. So if we start like rebounding back up here, then I'm very carefully watching this little hurdle, the high of Thursday, because then if you were looking at this from the technical perspective, then maybe we could maybe start pushing back up. We clear this area, this 1.3860, we clear it, we push higher, we test this downside line taken from the highest point of February, and then maybe, just maybe, we'll start clearing these EMAs as well. So at the same time, we break everything here, and at the same time, this becomes the so-called little neckline of a possible double bottom pattern. Again, just an idea that out there here for you for to analyze, to discuss, and to kind of think about. But again, we're trying to look at all different scenarios. Again, like I said, the Bank of Canada interest rate decision is expected to keep the rate, the interest rate decision is where we're expected to see the interest rate staying the same. There we go. Something's happening to me today. Honestly, I'm trying to squeeze things out of myself, and it's not happening. Anyway, you got the picture, right? So what I'm trying to say is that be careful, be cautious. Yes, on one hand, it looks like that the Canadian dollar could continue strengthening. However, given the fact that the market kind of understands that already, kind of, and is pricing in, then the question is like, what's going to happen with the US data? And on Wednesday, don't forget that we have the ADP number. So that's coming out before the interest rate decision. So in general, this week is quite an important one because, again, we have the US jobs. So today's Tuesday that I'm recording this, so we're still going to have the JOLT job openings, which are expected to decline, which could be a little bit of a bearish moment for the US dollar. ADP is expected, let's have a look what's happening here, is expected to increase a little bit, so that's great. So actually, I think that to beat 62, well, you would really have to have like bad numbers, but to beat the 62, maybe that's a little bit on the lower side. So let's see if we can beat that. And maybe this is where, the US dollar could strengthen and kind of push back up a little bit. So again, there's a lot of things to consider. For now, like I said, watching this carefully. Like I said, I'm watching this formation very carefully. If we start somehow clearing this steep, I wouldn't actually say maybe steep, this long-term upside support line, if we clear it, okay, look, then it's going to be great. I think for the bears, everybody could start aiming for the 1.34 like 19 zone, something like that here, and then we'll go from there. So in general, this target could be an important one. This area near the lowest point of September of 2024. And like I said, and then we'll go from there. We'll reevaluate things. We'll see if we can, maybe see a rebound or something like that. But at the moment, I'm carefully monitoring this situation here. Maybe actually the arrow should be drawn this way. So I hope this helps somehow. Sorry for a little bit stumbling in a few parts of the video, but there's a lot of information that I wanted to pass on to you, and probably the the flow of the words didn't really go well, but hopefully you got the message. So that's the most important. Ladies and gentlemen, thank you very much for watching and listening. As always, I really appreciate your time, your views, your likes, everything, and I hope you will subscribe, the usual stuff. I hope you will like. You hope you will follow, and hope you will. I hope to see you in my next little video. So also you can join my live session on Wednesdays. Actually, Monday, Wednesday, and Friday when you can join my live sessions. So yes, just check out our YouTube channel, and it will go from there. Ladies and gentlemen, thank you very much, and I'll see you later. Bye bye.